Mr. Governor, how worried are you that rising energy prices and supply chain bottlenecks could threaten the euro area's economic outlook? How big is the risk that these trends could derail the recovery and entrench higher inflation over the medium term?
Well, I will not rush to say that we have stagflation now. The situation is still under control. It is true that we are in the midst of a perfect storm. Bottlenecks due to the pandemic, higher energy prices, gas prices are up 500% since the beginning of the year. Electricity prices are up 250% since the beginning of the year. But despite that, our forecast, the ECB forecast, the OECD forecast, the IMF forecast, is that inflation will exceed 2% this year, but next year and the year after, that is in the medium term, it will fall below 2%.
Do you expect the supply squeeze and its consequences to have any impact on the decisions the ECB is set to take in December? Will they delay an exit from crisis-era stimulus?
Well, in December, we have the next forecasting round. For the moment, we see no need to change the stance of monetary policy. As I said before, next year we expect inflation to fall well below 2%, actually 1.7%, core inflation, that is underlying inflation even lower, 1.5%, in 2023 even lower. So for the moment we see no need at all to change the stance of monetary policy. But we'll discuss all these things in December when we're going to have the new forecast for the next 3-year period.
Is it reasonable to assume that PEPP will stop at the end of March from today's point of view? And when it does, is it likely that APP will be stepped up?
We haven't discussed the sequencing yet. As you know, in principle, the PEPP will end in next March. Of course, it could be extended. It could be cut down before, depending on the financing conditions. We want favorable financing conditions. We haven't discussed any change yet in the Governing Council. This will also be discussed in December, in the December meetings.
Will the new bond buying program to prevent any widening of spreads when emergency purchases get phased out next year be a solution?
We have a program now. As you know, asset purchases, they aim at favorable financing conditions, at smooth transition of monetary policy, to prevent any kind of fragmentation in jurisdictions in the euro area. So these are the principles, and I'm sure that the Governing Council will continue to aim at this.
Okay. Do you see any merit in moving away from communicating a monthly purchase pace and instead work with envelopes that are to be spent over a certain period of time?
No, I think the plan, as we have it now, is perfect. We have very favorable financing conditions. There is a positive contribution to growth and to inflation, so I don't see at the moment the need for any change. Of course, these things are not written in stone. If circumstances change, we might change our approach. But for the moment, we see no need to change either the operations or the stance of monetary policy.
So, do you see what other tools will have to be adjusted as the ECB transitions out of pandemic stimulus? Do you think that? Well,
as you know, we have many tools apart from the PEPP, apart from the APP. We have the TLTRO. We have the new forward guidance. We have the new target of monetary policy, that is a symmetric inflation around 2%. I think all the armory is on the table now.
Okay. Investors currently expect interest rates to start rising up around mid-2023. Is that assumption realistic, especially considering that asset purchases will need to end before interest rates start rising?
No, these expectations are not in accordance to our new forward guidance.
So the Fed and the Bank of England have both started indicating the start of a period of monetary tightening. When will the ECB be in a position to move in that direction? I mean, what signs will you need to see to be able to relax your stimulus stance?
As I said before, we describe these conditions in the new forward guidance. We are not in the same position as in the United States, as the Federal Reserve and the Bank of England. The inflation forecasts are lower for the Eurozone than in the United States and in the UK. So it's natural that we are in a different phase of monetary policy.
Okay. You recently said that it's your expectation that ECB's Alter Asset Purchase Program will be adapted to buy Greek debt after the pandemic program ends. Do you think that the rest of the Governing Council will support this idea to prevent any disruptions to monetary transmission? Well,
my strong belief is that the Governing Council will prevent any kind of fragmentation of the transmission of monetary policy in any jurisdiction. It's true that Greece does not have investment grade yet, but I'm sure that if we didn't have the pandemic, investment grade in Greece would have been restored now. Despite that, there is very substantial progress in every respect. In the real economy, we expect a growth rate of the order of 7% this year, even higher, and about 5% next year. The situation, the fiscal situation is under control, despite the pandemic measures. The banking system has improved tremendously. It has reduced non-performing loans. It has stopped capital and financial markets many times this year and the year before. So I don't see any reason why the Greek economy should be excluded from any kind of program.
Is it going to be discussed in December too, or the Greek issue, I mean?
Yes, I think it will be discussed sometime, yes, of course.
Okay, so Europe is discussing changes to the Stability and Growth Pact. To what direction should they be, and how Greece can benefit from these changes?
Although this question is better addressed to finance ministers, I can tell you that there's going to be an ECB opinion on that. So I have a view, and my colleagues also in the Governing Council have a view. I think they all agree now, both policymakers in Europe, academics, that there should be a reform of the Stability and Growth Pact. It should become more transparent, it should become simpler, it should eliminate all procyclicality that exists. And in Greece, we have a very bitter experience in the past. In Greece, as you know, despite the fact that we had the biggest adjustment ever in the budgetary results, in the primary effort of the budget, more than 15% of GDP from 2009 to 2018. At the end, the debt to GDP ratio was higher than in the beginning. That was exactly because of procyclical fiscal policy. That was because the snowball effect, that is the difference between the interest rate and the growth rate, neutralized completely the fiscal effort. So we should learn from our mistakes, and I'm sure that this will be done.
Now, a question on Greek banks, if I may. Are you worried that they will be found themselves with a new bulk of pandemic-related bad loans that will make their job?
Well, some pandemic non-performing loans will appear. There's no question about that. But we hope that there's going to be a bridge in the sense that it is true that the government would reduce assistance to all sectors of the economy smoothly, but definitely in the next 1 to 2 years. Now the primary sector, the primary balance budget deficit is 7% of GDP. This is expected to fall to 0 in 2020-22 and perhaps go into a surplus in 2020-23. So certain sectors, especially the most vulnerable one, will be hit by this. But high growth, both this year, next year, and the year after. As we know, we had a spectacular tourist season this year in Greece, contrary to our expectations, will act as a bridge. So yes, we are vigilant. We might have new NPLs, but we don't expect that this is going to be a massive number.
Okay. And as you mentioned before, the growth projection for Greece has been revised upward, and the same is for 2022, also due to a boost from Europe's pandemic funds. Are you worried that all these funds won't be absorbed by the Greek economy?
Well, as you know, Greece was very well prepared when it applied to the European Commission for the Recovery and Resilience Fund. So it has now a very good team dealing with that. They have approached banks, they have approached the major sectors of the economy. So I'm optimistic that Greece will absorb all this money in time. And I would say I'm quite optimistic because 30 billion from this fund, plus the structural fund money, makes 72 billion altogether for the next 7 years. So, along with the structural reforms that Greece is doing now, I think can secure an average growth rate of the order of 3 to 3.5% in the following 10 years. So, I think we are on a benign track now.